you may have seen the stock market hit the first record high of the year on Friday. But why? What has the market and investors so excited? Here, I'll show you.
With policy in restrictive territory, the baseline outlook and the shifting balance of risks may warrant adjusting our policy stance.
Well, that was kind of a letdown. In English, please. Let me interpret Fed Chair for you. What he just said is about as close as you're ever going to get to the Federal Reserve Chairman confirming that maybe the Fed is ready to lower interest rates. And that hint that maybe the Fed could possibly lower interest rates sent the market soaring on Friday. That's all it takes. But why now? Tell me the truth. Is it because of all of the threats from President Trump? Well, we're going to get into that in this video. Plus, I'm going to share some other things the Federal Reserve Chairman said that will absolutely be impacting your wallet and life, and maybe not in a good way. But first, I want to thank my paid Facts HQ subscribers for voting for this story as the bonus this week. If you want to vote on next week's bonus story and have access to a bunch of other perks, make sure you follow these easy steps and sign yourself up. Okay, so Fed Chairman Jerome Powell spoke at the annual Federal Reserve Conference on Friday. To be honest, it's kind of a snooze fest. But as I just showed you, the market literally hangs on every single word he says. Besides the hint of a possible interest rate cut, Powell confirmed a lot of the stuff I've been reporting to you since Trump took office. And this is where you should start paying attention. Let's start with tariffs. Powell said there is no doubt that Trump's tariffs are costing you. Not the foreign countries, but you and U.S. businesses are paying for them. And the Federal Reserve Chairman says you need to brace yourself for those costs to keep going up.
The effects of tariffs on consumer prices are now clearly visible. We expect those effects to accumulate over coming months with high uncertainty about both timing and amounts. The question that matters for monetary policy is whether these price increases are likely to materially raise the risk of an ongoing inflation problem. A reasonable base case is that the effects will be relatively short-lived, a one-time shift in the price level. Of course, one time does not mean all at once. It will continue to take time for tariff increases to work their way through supply chains and distribution networks. Moreover, tariff rates continue to evolve, potentially prolonging the adjustment process.
Let me interpret again. What he is saying is tariffs, once the president sets them, take time to work their way through the supply chain and find their way to your wallet. Chairman Powell says the best case scenario is that these tariffs are going to increase the costs we all pay for all the goods and services once. As he said, a one-time shift in price level. But that's not the only possible scenario. He also said it's also very possible that these tariffs could make prices continually go up over and over, sending inflation back up again. He said the Fed just doesn't know how to gauge it right now because the president keeps evolving or changing his tariff policy, which is prolonging the adjustment process. Basically, Powell says because Trump keeps changing his mind about the tariffs, the president is delaying the full price shock that we're all going to see in our budgets. But that doesn't mean that price shock is not coming. As Powell said, it also doesn't mean the price shock will hit all at once. Those price shocks may happen multiple times. The other concern Powell raised during his speech was the concern to the labor market. Spoiler alert, he is concerned about more layoffs and more Americans losing their jobs in the very near future.
While the labor market appears to be in balance, it is a curious kind of balance that results from a marked slowing in both the supply of and demand for workers. This unusual situation suggests that downside risks to employment are rising. And if those risks materialize, they can do so quickly in the form of sharply higher layoffs and rising unemployment.
Powell says for right now, it appears, at least on the surface, that the labor market looks okay. But when you look under the hood, there is an unusual situation happening. He says the data is showing that there are fewer workers available, which he says is directly tied to President Trump's immigration crackdown. But there are also fewer jobs available. And that's because of several things like the uncertainty with tariffs, but also because the high interest rates are not allowing employers to borrow the money they need to hire more people. So if there are all these risks to the economy with people possibly losing their jobs and inflation possibly spiking up again, Why would the Federal Reserve even think about lowering rates? Well, the Fed is really concerned about people being out of work. They don't want to see that happen. And for the record, Powell said nothing about the president's constant demands to lower interest rates. And he has said repeatedly he would never bend to anyone's will, including the President of the United States. He says the Federal Reserve will always decide monetary policy solely based on the data. And there is a lot more data that the Federal Reserve Board will have to review before they make an interest rate decision in mid-September.